Hey, Forex Fortune Hunters, let's find some pips. In this short video, we're going to describe the entry strategy we use on multiple pairs throughout the week during our Forex trading, and especially as we get together during our Asian trading session room. And I'd like to share it with you now, not only for a member review, but for people who might be interested in joining us, so you'll get the hang of what we're doing. In any event, here we go. Last night we had the London Open, and that London Open occurred at 3 a.m. East Coast time US. We had equilibrium established in the Euro USD 15-minute chart for some period of time into the morning hours, and at approximately 7 o'clock, between 6 and 7, we had a situation where we broke down through this indicator, which is called a chandelier. You can see once it's broken, it's breached, we get a reverse signal at the top. It turns from white to red, and it goes from support to resistance. This is a T3 Tilson that we're using also to help us understand where we are in the marketplace. With this breakdown that occurred, the bears gained advantage. The bulls, the Euro bulls, began to push back, and you can see here just after the vertical line I've inserted for clarity, we have a bit of a hanging man candle that develops as we push back into our multiple moving averages. We still are to the downside with the MMA. This medallion indicator that I've programmed suggests that the bands have twisted to the downside. That means that the 12 EMA is below the 24 EMA. We've pushed back, we've compressed the bands, but we've failed to break them. We never got an up medallion, which would be a twist to the upside. And so when we roll over, we notice also on our oscillators at the bottom, we've had two green histogram bars on the MACD, but we're still below the zero line. This indicates a pullback. We have an overbought situation that developed here on the stochastic, and we have a pullback but not a breach of the 45-55 level on the RSI. All of those go together to form a divergence pattern as far as I'm concerned, and when we roll over and we break here, we know exactly where we want to put our stop loss, which would be up in this particular area right here, somewhere in between the swing high and the T3 Tilson and the chandelier in this general range. But clearly, if we go above this level now, that would not be a good sign for the bears. And in fact, what happened was we continued to the downside. We pulled back, continued to the downside, pulled back, and now we've created yet another low. Now, I always like to try to get in at the first pullback after the breach of the chandelier. That gives you the most room to run. Once we're down in this area, if you consider this to be an outgoing tide, for example, TIDE as in the ocean, you never know when it's going to, be an ebb tide, begin to stop and maybe reverse and move in the other direction. So the further down you go, the less high probability you have for this kind of a reversal. Okay, and another downward leg. It can go on forever, but I still maintain that the best time to try to enter is on number 1 or perhaps even number 2. So, in particular on this particular case, from about 7 or 7:30 this morning, we had a pullback down here to this low of about 55 pips, which on the Euro USD in about a 3-hour period is not a bad rate of return. I hope you've enjoyed this brief introduction to how we approach our trading in the trading room. Forex Fortune Hunters, please go to winvesting.com and join us in the room. Thanks for watching.